So Sundial Growers stock is another absolutely insane one. After getting shorted heavily, it experienced massive growth of more than 2,800% from its lows to the highs at the beginning of the year, but pulled back since those highs to about $1.14 right now. That means we are also up more than 145% since we last covered the stock about a week ago. So what we are going to do today is give you an updated insight into what is happening to Sundial stock and break down exactly whether it is still a buy at the end of this video. And as the analysis in the next few minutes is absolutely crucial to consider before buying the stock, make sure to stay tuned. Really quick before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. So as mentioned in the intro, and this is crucial to consider for the prediction at the end of this video, the stock was gapping up massively at the beginning of the year. And as we said last time, sudden jumps in stock prices present huge opportunities for management, as they can quickly close equity offerings at higher and often inflated prices for extremely easy access to cash. And Sundial Growers took full advantage of exactly that, which also is reflected by the recent momentum and volume in the stock. Going back to July of last year, the company only had about 100 million shares outstanding, which is nothing compared to the astonishing 1.66 billion shares outstanding right now. The good news with this is that the company paid back all of its debt with the new capital and is still left with 719 million Canadian dollars in cash. But with some criticism on the product side of the company, we, in order to figure out whether the stock is a good shot, have to take a deeper look at the company and its business itself. So Sundial Growers basically is a cannabis company for the adult use market. It is also involved in the business of ornamental plants and herbs in the United Kingdom, while offering its products under multiple highly popular brands. What's super important to know, however, is that it is mainly benefiting from two upbeat factors, with the first one being that the company itself is extremely transparent. Quick Google searches of their website allowed Reddit users to have helped make Sundial Growers the literally most discussed cannabis stock of 2021 so far. But the stock also appears interesting based on the technical chart. Another major growth factor is the surrounding hype. That's because the stock was heavily traded among retail traders and massively talked about on forums like WallStreetBets. And despite pushing up a little too fast, you don't experience bigger pullbacks afterward. Buyers made clear that they're capable of bidding the share price up to almost $4, now performing a recovery from those recent lows. Additionally, and this is also very important, before we can come to the prediction, the fundamentals of Sundial stock are on point. And with the recent offering, they will have $700 million in cash on hand and completely eliminated debt. But there's also legalization in the works as well. Another quick look at similar stocks that got picked up by retail traders, especially AMC, proves the still enormous power of retail traders. Moreover, Sundial Growers and Inner Spirit Holdings have also entered into an arrangement agreement pursuant to which Sundial will acquire all the issued and outstanding common shares of Inner Spirit for total consideration of approximately $131 million. The combined company will continue to focus on providing quality cannabis to consumers through a responsible and disciplined approach while creating enduring value for shareholders. And with global cannabis sales exceeded $21 billion in 2020 with forecasts of $55.9 billion by 2026, the future's looking good. Sundial is positioned very well against its competitors and will invest heavily in the US by merging or buying other companies. It could see an upside of $4 by 2021. 2022 will be extremely profitable for the cannabis industry, and Sundial could be a good investment to hold for a long-term value. Alright, with that being it for today's video, however, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.